All right, guys. So banks are a big talk, right?
Yeah, big time.
And there was an article on Yahoo Finance today. Do you want to pull it up, Mo?
Yeah, it says half of America's banks are potentially insolvent. This is how a credit crunch begins.
Okay, so first off, I'm going to say I have no idea if that's true or not. No clue. Probably isn't true if it's being written about. But I will say this. For all of you people out there, you know, if you go back in our channel history, there's a lot of people, we kept saying like, listen, valuations don't make sense, this doesn't make sense, etc. I go back to 06 and 07. I remember friends of mine were investing in real estate deals and they were doubling their money, doing great. The second the market crashed, they lost their money, what did they do?
Blamed what happened.
And they started suing people. I'm suing the guy who did this. I'm like, wait a second, time out. You're suing the guy now, right? Why? Well, because he shouldn't have taken on so much risk. Do you think his risk changed last year to this year?
Probably not.
No. He was probably doing stupid things already.
Right. But now they got magnified
But now when the market blows up, and then I was criticized back then I remember being told by other investors, you look at a piece of real estate the way you look at a bond. And I'm like, well, a CD, they said. And I'm like, well, it's a stream of cash flow.
Yeah.
And I'm not going to look at it like a CD because a CD has no growth rate besides the interest being paid. Real estate does. But I get what the thing is, I look at these banks. Do you think these problems just arose recently?
No, they've been going on for quite some time.
If there is a problem there, it has been there, but people just didn't observe it. Why? Because a bull market makes everybody feel better.
Yeah.
Makes everybody feel like a genius.
You can mask it.
It can mask a lot of problems. We always joke in our business upstairs, sales will solve a lot of problems, right? And that's where I get a little frustrated. Because I look at it saying, wait a second. So we're called fudsters because we sit there and say, hang on, be a little more conservative here. Understand what you're buying.
Right.
And when you don't understand a bank, you don't understand the issues there. You know, our banking analyst that we know, he said, listen, I looked at Silicon Valley Bank. I didn't see exactly the issues that caused their downfall. But what I did see were other problems that made me go, I'm out. Mm-hmm. And that's something we want you to understand. If you look at investments and you look at certain things, and there's certain things that just pop out at you and say, wait a second, this is not adding up. An analogy would be this. If you started dating somebody randomly and they were always hiding their phone, always texting somebody and smile. Hey, who are you texting? Oh, no one. Would you sit there and say, yeah, it's probably nothing?
Yeah, it's probably, don't worry about it.
Right?
Yeah.
What's the difference? The difference is when it comes to investing, most people buy investments in stocks that they don't really understand.
Right.
They don't know what they're buying. And a lot of people could say that about me, right? When I buy a stock, Paul, you don't get this. I get that. I understand that. And you might disagree with me on my analysis. People said it about Baba with me and said, oh, you don't get China. Maybe I don't get China. That could very well be the case. But when I don't understand, when something doesn't work out for me, I don't sit there and say, you know, I recently said I was wrong on Walgreens. I was wrong on CVS. And I could be wrong on Intel, right? Mm-hmm. And I do think I was 100% wrong on CCL, Carnival Cruise Line, and Walgreens. Mm-hmm. And I think Walgreens still has better potential, but I look at the analysis of it, I go, you know, I just didn't do the right analysis there, right?
Mm-hmm. Yeah, but also since that time, landscape has changed. Like they've gotten more into this health hub business.
I think that helps their business.
It helps it, but it makes them allocating capital to different areas now.
Yeah, and I think
help them in the long run, but it could look really bad on their financials right now. CCL looked good. Because they didn't have the crazy amount of debt, and they took on an insurmountable amount of debt.
Well, no, they had a lot of debt. They had a lot of debt,
but it wasn't insane like this.
But it didn't stop. That's the problem that I had. I was just like, whoa, the share dilution didn't stop, and I was like, whoa, okay, I missed that. Like I thought it would stop.
Yeah.
Right, and it didn't. It's like, okay, shoot, that was it. And somebody warned me about that, saying, listen, I think the debt situation isn't going to end. I think the dilution isn't going to end. I was like, well, I do think it will end. Well, they were right. I was wrong. Mm-hmm. Okay, so the whole point I bring up about this is, first off, it aggravates me when banks start to fall and then it's articles like this. Well, where was this article a year ago?
Yeah, where was this article 3 months ago?
Yeah, where was it where it was like, hang on a second, guys, we got to be careful here. Like we have said about companies, hang on a second, guys, all these hype EV companies, all these hype companies, Peloton, wait a second, what has to happen for this to work out? We still get criticized about Tesla and crypto. Those are the last ones that haven't fallen yet. And I've said these are the two pillars, these are two poster children of this bull market. Mm-hmm. It's Tesla and crypto. I think crypto is absolutely useless. I think Tesla at the right price is a very useful investment. Yeah. Banks, I just don't get banks.
I don't think there's a lot of people that do get banks.
What was that?
I don't think there's a lot of people that do
That's
get
the
banks.
thing. There aren't a lot of people that understand banks.
We have a lot of people that contact us. We've had one person that can explain banks to us.
Yes.
One
person.
We even talked to CFOs of some banks.
And my mind was even more confused after talking to a CFO. She wasn't a CFO.
I think she was like
she was a banking
small-time
analyst.
CFO or something.
She was a banking analyst.
Oh, was she?
She was the head banking analyst. We won't say at what major bank it was, but literally I walked away from that meeting going, what the hell was that all
She'll
about?
probably get promoted to CFO one day.
But the banking analyst in a small company knew way more than her, was able to explain things way easier.
Yeah.
And I remember thinking to myself in that call with the banking analyst, with the one that was, well, I was like, what the hell? I remember thinking to myself, I don't think they understand banks. Like, why use such big term? But the other person was just like, okay, here's the deal.
Dumbed it down.
Yeah, net interest margin, expense ratios, boom, boom. It's like, okay, makes sense. Yep. Book values, okay, makes sense.
Yep.
So I want from this channel, and if you're new to our channel watching this, subscribe, because what I want everybody to do is be okay asking questions. It's okay to sit there and say, wait, this doesn't make sense.
It's also okay to say, I don't understand this at all. I'm just going to move on from here.
So a company that I've been following for a while, Generac. Look at it today.
Oh, wow.
Zero FOMO, guys. I don't own any Generac shares. I had puts. I have zero FOMO. Like, I don't look at this going, mother F, I missed it. You know why? I don't think it's worth 117. So imagine having that ability to sit there and calmly say, yeah, I'm okay with this, because I don't want to own it at 117. I want to own it call it, I don't know what the exact number is, but call it 70. I've still been observing it. I still need to wait for things to come out, but I look at this going, this is where I want you to feel good, that you missed this and you're okay with that. I imagine that world. Just sit there and close your eyes and think to yourself, imagine a world in which a stock you want, but it hasn't hit your price, has skyrocketed 14% in one day. How would you feel? Because I remember 15 years ago, 10 years ago even, I felt like crap. Mm-hmm. Oh my God, I missed it. Now I just go, okay, I'll just wait.
Yeah.
I might never own it. That's okay.
Yeah.
That's the key here. So going back to the options there, this Thursday, 6 p.m. Eastern time, we have a free webinar. Sign up to the link below on how you can use options to generate income for yourself on your portfolio to buy stocks you want at much lower prices. And if you have a portfolio of stocks, to be able to make money on that portfolio as you go forward, add a few percentage points to yourself per year potentially by just getting extra income on the portfolio you currently have. So again, Thursday, 6 p.m. Eastern time, free webinar. Click the link below in the description. Easy to find, sign up, it is free. So back to this. This is what I want you guys being okay with. I absolutely want you guys being okay with sitting there saying, well, stock went up, okay.
And also be okay with, and this is speaking to people that like to gamble, when it comes to the first republics in the world, we had people in our community that were like, I'm going to throw a couple $100 in this and see what happens. There's also people, probably not in our community, that went crazy with this and said, First Republic is coming back. I'm going to buy it so cheap. And now they're no more. They probably did the same thing with Silicon Valley Bank, Signature Bank. Don't chase these things because you see a fall of 40%. They may never come back. If you see it rally 40%, don't go short on it. Don't go crazy with these things. I hate seeing that.
Yeah, and listen, it's exciting to do those things.
One little gamble, sure, $100, whatever, but don't go crazy with these things. Don't put your life savings into this and say this is what's going to make me rich.
Yeah, because a lot of people say you got a high risk, high reward. No, you know what the world of value investing is? Low risk, high reward. Yeah. That does exist, but the difference is that it only exists in areas that people don't understand. You have to be one of the few,
and it takes time.
If you're the kind of person who wants to gamble, we're not the channel for you. We're absolutely not the channel for you. There's Stockmo. There's who are the other ones?
His cats.
Tom Nash.
Oh, they're the prisoners.
Our Meet Kevin. Those are the channels you go to if you want to gamble, have no understanding of money, and just go piss your money away. Those are the guys to follow. Absolutely. And I've said before in many videos, I believe in the next 3 to 5 years, those guys will be promoting something else on their channels. One guy said he's a value investor and was talking about Peloton at 180 being a great buy and Palantir at 45. And we were like, I still don't know the price for Peloton. And Palantir, I liked it around $5, $4. What's it at now? I don't know. But we're looking at some of their income reporting going, wait, this is a little shady maybe. So the whole point is there's 10,000 stocks out there. It's okay to say no to 99% of them. And on the last 1%, be very selective. That's what we want you to be. We want you to be active. If you don't want to do that, don't. Low-cost ETFs. But also, you need to be able to ask questions before problems occur. When you start seeing things become a little too easy, ask the question, why is this too easy? I remember years ago meeting with an estate lawyer. Guy made $3-4 million a year, worth 20-30 million, has 2 private jets. And he was trying to pitch me nursing homes. And I looked at the numbers. I finally looked at him and I said, Chad, how do these make money? And he literally said these words to me. I have no idea. They just do. And I was like, and I'm out. And he still does well with it because a rising tide raises all ships.
Yeah.
But I do believe in the nursing home business, there'll be a come to Jesus because everybody wants nursing homes.
Everywhere you turn, every road you turn on, there's a new nursing home coming in.
Everybody wants nursing homes. And I'm looking and going, okay, it might be fine for a while, but eventually, just like everybody wants a college degree. And it took 20 years, but finally it came to the point where it was like, oh crap. Taking debt on to have a college degree probably wasn't the best idea. Yeah. When I was in high school, it was literally get your college degree, any cost, all costs, go do it. Mm-hmm. Now you hear companies like Microsoft and Google saying, we're not going to ask for college degrees anymore. One of the original developers for our stuff, he never got a college degree, and he's in California making $400,000 or $500,000 a year with bonuses. Yeah. I look at it going, okay.
Yeah.
So this is the mentality I want you to have when you see because when the market goes down, and we do believe the market's going to go down way more than the 20 or 30% people are projecting now. It might take a while. It will take a while, but it's eventually going to go down much further. But when it goes down, you're only going to see negative news in the markets. And I'm going to sit there and say, so wait a second. When the S&P was 4,800, it was nothing but good news. The S&P is now 2,400, half the price. At some point, you're going to say there's nothing but bad news. That literally makes no sense. If you're hearing this right now and don't get this, close the video, you shouldn't be here. But if you get the fact that, wait a second, there's a valid point there. 2,400, the world's coming to end, 4,800, nothing could be better. That is exactly the wrong mentality. The right mentality, sorry. To be able to sit there and say, that doesn't sound right. And we're not trying to be the channel with 20 million subscribers that try to appeal everybody. We're trying to appeal to a smaller group of like-minded investors. Our community here is several thousand people, but it's amazing to me. Literally yesterday, love the red day. I saw how many messages. Paul, love these red days. I'm like, so do I. Mm-hmm. We shudder when we see this. All green. We go, oh, that sucks for us. And when we find a stock that we like, Mo and I were just talking yesterday about how we're going to keep buying stocks we like at lower prices. Yeah. Because our biggest issue is pulling the trigger. Yeah. Going, okay, should we wait a little bit longer? So now we have a plan. Every week I'm going to buy stocks I like as long as they're selling on my stock analyzer tool. When I run the numbers, as long as they're selling for below my middle number. So let's pull an example up for Southwest Airlines. I was just throwing some numbers out there. I'm not telling you I'm buying at a certain level. But as long as they're selling for below my middle number, and depends on the situation. Like for Southwest, I don't think I want it at 54. But the whole point is, as long as if it's definitely selling for below this and I like it, I'm going to buy some. Again, do not do it just because I'm doing it. You have to understand your own investment thesis. Mm-hmm. If you buy things just because somebody else is buying it, you're going to make a lot of mistakes.
That's not a thesis.
That's not a thesis. Do your own analysis, but that's the benefit of this channel. You can do your analysis. So if this made sense to you, subscribe. And don't forget our free webinar Thursday, tomorrow, 6 p.m. Eastern time, link in the description below. Thank you very much for your time.